If you'd like to see more of our videos, hit the subscribe button to stay on top of the market news. Good morning, traders. Welcome to today's market review. This is Fred Razak at CMtrading. Today's September 11, 2020. And today is Friday morning. So looking at the highlights of the day, roller coaster continues to shake the markets as we're seeing a rotation of the markets once again. But first, let's take a look at the economic events of the day. So there's no major economics scheduled for today. However, next week we will have FOMC scheduled Wednesday as the interest rate decision continues. Now, looking at the markets, we watch the euro have a fade opportunity. I'm going to take a look at that. And the GBP loses ground. Okay, now looking at the NASDAQ and the Dow Jones both selling off. Looking at commodities, gold wavers while oil trickles down continuously. And lastly, looking at the stocks, we see a sell-off across the board. Now, this volatility in the market was to be expected. I mentioned it a few times last week as the markets are hitting into September time. But first, let's take a look at the opportunities that we could have today. So taking a look here at the Euro USD at a 30-minute chart. Look at this beautiful move, this fade opportunities, the spike up, and then the correctional move that happened right afterwards. This was a very, very decisive kind of move. And for those of you who have been to my webinars before, we've spoken about these type of opportunities when they present themselves. And so really this was a beautiful move on the upside, especially since we hit that resistance-ish level at that 119-ish level. If you look at that, you could see it much more clearly here. But we're really just trading sideways right now. We've been trading sideways since the beginning of the month, okay, of August. Okay, so we've been in a sideways trading in a decent range, okay, between this 180, I would say 118-ish level and 119-ish level, okay, mostly. Okay, so we're right, not smack in the middle, just below that. But I do expect this to continue wavering within these two parameters, at least until next week when we do have the interest rates coming out of the United States. Now, jumping to the GBP, we're seeing it lose ground here, okay, tremendously over the past week from 133 down to 128. Now, we are hitting a previous support level and also a previous resistance-ish level. So I do see this 128-ish level as a potential area where we may bounce. So say, okay, so keep this in mind as this continues to trade throughout today, and we may see that bounce. Okay, it's also, since we've had a week of selling, this may be a point where it does actually trade for a bounce. Now, looking at gold, all right, gold also is trading within a range since the beginning of the month of September. Okay, we've been trading as high as 1964. That was yesterday's move, and then we paired the gains to 1942. But in all intents and purposes, we're still within this range really, and not breaking out higher. Now, looking at oil, we're still trickling down. Okay, the consumption and the production of oil is tremendously down. Okay, we are still in the pandemic. We're still a lighter traveling volume than we've ever seen in the history of the past, I would say 30, 40 years. Okay, so this is really being affected to the price of oil, and it will continue to be affected. Okay, especially as we go into the winter months. Now, looking at the Dow Jones and the NASDAQ, Dow Jones gave a big whopping retracement this week after hitting 29,000 just a week ago. Okay, we hit 29,100-ish level just a week ago. Let's look at a 4-hour chart just give us perspective. That Monday we came in and we sold off aggressively from last Thursday, and then continuously to sell off. But you see that there's these massive, okay, money to be made on both sides. Every time we go down, we spike up and we have these short coverings that continues to go higher. Okay, does it look like we're at the end of the selling? Well, it doesn't look like it. Okay, we're trading at 27,700-ish level. We do have support at 27,422. Okay, so if that gets breached, we could see it go back to the 26,000-ish level. 800 would be my next real support level for subsequent support. So on the upside though, okay, definitely 27,800 has been an area where we couldn't break above, and especially 28,000 has been an area, and that's confirmed. Okay, so with that said, just be aware that this is still trading a very with much volatility, okay, which gives you a lot of opportunity, but you do want to see and make sure that you're trading on the right side, because this could get against you quite aggressively, okay? But you got to keep an eye on the stocks. Now, looking at the stocks, okay, they're not holding up. JP Morgan gave it up a little bit, as you can see, as we've had this decent wedge formation, okay? It could be a, if it does break this $100, especially if it breaks 99.55, we may see it breach that, and that would be considered a breach on the downside, okay? Now, volume is starting to pick up where you're seeing the red lines, okay? Right here, for example, we see the volume is spiking up, and it's spiking up in the red mostly, okay? So that means it's more aggressively for a downturn than it is for an upturn, okay? So just be aware of that, as that may continue to sell off maybe later today as we continue selling off, okay? So something to consider as we go into next week, especially because the FOMC wants to limit the amount of damage this COVID-19 is doing to the economy. Okay, so something to consider going into next week, and that's why I'm doing JP Morgan first. Now, looking at the tech stocks, they all sold off. Okay, looking at Microsoft down to 204, $30 off of its highs. Facebook also down, okay, $40 off of its highs. Apple, okay, trading at 111-ish level, okay, after that stock split. You know, for all intents and purposes, it's trading down $20, okay, times 3. So that's, you know, that's $60 off of its highs, okay, so that's a considerable amount of retracement. Looking at Amazon as well, trading at 3,100 after hitting a high of 35.33. Now, I do want to bring your attention to one last stock. It's Cisco. Okay, now Cisco Systems is a big, huge company that does networks for companies. Okay, now Cisco in 2002, when the markets debacled, Cisco was the major player. Okay, Cisco was one of the reasons. Cisco and Intel were one of the reasons the market really tanked. They are a bellwether. Okay, they don't trade so aggressively, but when they do trade, they trade. Okay, so since we had this gap down in mid-August, we have not seen ourselves actually, sustain ourselves into building higher. Okay, and it just looks like it's going to continue going down. Now, if this does continue going down, it's going to bring the rest of the market down with it. Okay, it's a major bellwether. Yes, all the high flyers, the FANG stocks, are the ones that everybody's concentrating on, but it's companies like Cisco that really can tell you the difference between what is really happening on the ground in the markets in the U.S. This is Fred Razak. I want to wish everybody a great trading day and a beautiful weekend. Thank you.